What is going on, y'all? Welcome back to another episode of the Easy Button Real Estate Podcast with myself and Mr. Tucker Merrihew down in Naples. It is summertime. Um, we just passed the longest day of the year, which is always kind of sad. It was really sad living up in Seattle when you passed that summer solstice, and now every day got shorter. And by the time you get to October or November, you're back to 3 o'clock bedtime. So Tucker, what do you got going on down there, man? I guess you guys are already a month, like here in California, already a month or so into summer when it comes to kids and stuff. But when it comes to kind of peak summer season, what do you got going on down there?
I mean, it's sweaty season. That's what I
Yeah.
call it. You don't wear cotton. This is like, dry fit stuff only. You wear cotton shirts. If you go outside and you're on the job site at all, you're going to soak it and it never dries throughout the day. So it's definitely sweaty season, but kids are good. Obviously, I'm a little more cleaned up, a little more polished looking than the last time we did it. Wife's birthday, as I told you before we started recording, was yesterday, and she said, "You gotta not look so much like a homeless man." I'd like, my original husband back, at least for a little while. So
The one I signed up for.
yeah. Not the one that I, grew into. So anyway, I chopped the hair, cleaned up the beard, and got a little cleaner look going for today's show. But yeah, other than that, things are good. It's definitely summer season down here. Hasn't slowed down a ton as far as our rentals go. I had a checked in yesterday, got to check in today, got to check out tomorrow. So for June, we're actually humming along pretty good. July historically has always been super busy for people coming here, even though it's, sweaty season. And we're booked on pretty much everything that we've got all the way through July. So it's, definitely busy, but it's summertime. So the traffic is way less. You can go wherever you want, whenever you want. We went out to dinner last night at a nice Italian joint, and there was like 2 tables of people in there, where normally the place
Wow.
you can't get a reservation, during season. So it's kind of the time of year where locals, we can just be like, "Hey, let's go out tonight." And we can literally go wherever we want. We don't have to worry about, reservations or not being able to get in or whatever. So it's nice. This is actually one of my favorite times of the year, even though it is a little bit hotter and more humid than normal.
It's really that intense of like it goes from every restaurant being packed to, wall to wall to, you can walk in anywhere.
Yeah, because you think about it, like the people that are full time, they're full timers. They got families. They run businesses. They have jobs here. The people that kind of come in and out are really the snowbirds, right? And there's like usually 2 of them. They don't have kids, so they don't cook much. So they're always going out to eat.
Yeah.
So
Yeah.
that's why there's so many restaurants down here, because during season, like they literally go out to eat every single night and go have cocktails. Like that's what they do. It's like summer camp for adults, but
Yeah.
they with drinking and lots of Viagra.
Yeah, so when we moved down to the beach house for the summer, which we're doing this Sunday, down in Mission Beach, the same thing. We very rarely eat in. It's just, it's kind of like summer break where, I'll still go to the office, but, it's a very different, your brain's kind of in a different operating mode.
It,
Yeah.
it definitely is. I mean, being that close to the beach it's hard not to have your brain function a little different, honestly, but it's not a bad thing. I mean, you just have to be a little more disciplined about your work hours, but at the same time, it allows you to kind of unwind a little bit easier, just being kind of near the beach like that.
So how are you feeling about right now about, rates, wars? What's your kind of, internal outlook on where we're headed right now with real estate as a whole, across the country? Obviously, it's different in different pockets. There's still some pockets that are performing great, but what is your general like summer heading into the fall, heading into the winter? What do you think is in store for us if you had to be, an armchair economist here for a second?
I mean, the 10-year bond dropped today. It's been dropping since, the supposed peace agreement that may or may not actually be a peace agreement gets done with Iran. So if that gets done, which I'm hopeful it does, I think that we'll at least put some more certainty in the fact that we've averted some sort of a nuclear war or some sort of crazy ongoing conflict that's going to cause us to spend billions and billions and billions of dollars, in an overseas war. And if that's the case, I think people will start to return to, longer term asset markets, real estate being one of them. So my gut feeling at this point is, as long as this peace agreement or some version of it holds, and we kind of make it to whatever fruition is on that,
Yeah.
um, I think it'll keep the bond rates down, and I think, ultimately, we'll be in a better spot at the closer to the end of this year than we are right now. So I kinda see it as a positive trajectory. I don't know how positive, but we'll just call it better than now.
Yeah, it's funny. I always laugh every time I see a TV at night because we have the news on once in a while, and they're talking about the peace agreement. I'm like, there's not gonna be really any peace with a country that's been at war for, like, thousands of a region that's been at war for, like, thousands of years. I just don't think that I don't think that, I think a lot of this is a dog and pony show at this point of, like, "Hey," I think they had a much different plan going in than what they
Oh,
do
you
now.
think?
Their plan I think their plan going in was very Venezuela, like, "Hey, we're gonna do 1 or 2 things, everyone's gonna bow down, we're gonna take out their leadership group and, rule the world." And I think the Middle East and South America, I think, are 2 very different, fields to play
Well,
on.
yeah, I mean, Persia's been around for centuries. Like it and it's fought everybody and it survived, right? And for some reason the politicians of Israel and the politicians of the United States thought that it would just be an easy thing to like overtake this country that basically has a chokehold on the world economy. And has also fought just about everybody over the course of time and won, or at least sustained. And so I think that was, yeah, like you said, it was definitely not gonna be a Venezuela type situation at all, but, we've got, like, these a lotta older boomer types running this country, and my parents are older, I don't know how old yours are, but once they start getting into their upper 70s, their decision making is not great all the time, and so I don't think that that same logic, couldn't apply to people running, countries and making big decisions,
Well, I
they
think
just
you
have
lose
no power.
I think as you get older, which I don't think is a bad thing, you lose a little bit of, like, how does this decision impact everyone in the world? Because you're kinda like, he's not running for president again, right? And you kinda also shift to, like, from what I've seen, all you really start caring about is your family. It's like, make decisions that benefit your family, and everything else is kind of, a secondary thought to that. So, I just think we've gotten ourselves in some, situations as a country that made no sense to me and still make no sense, and have had a I think the real estate market would look very different right now if, we wouldn't have, engaged 3 or 4 different countries in the past, 12 months.
Yeah, well, that and, like, maybe let's try and fix a few problems here, before spending all this money and all this time and energy and mental bandwidth of everybody, trying to do something somewhere else. I mean, I know they passed, whatever that housing act is, and I read through it all. Supposedly that was, supposed to be a big win for, the current administration, but I don't think there's really much in there. The only thing that I saw that maybe benefits, like, retail real estate is that you no longer need, FHA certified appraisers to do appraisals on FHA, purchased properties. Maybe there was something about, mobile home parks and basically being able to finance something that's on blocks versus having a steel, chassis underneath it, but RV parks or mobile home parks are just a very small subsection of real estate, and one that I know it cash flows well, but it's not a sexy one at all, so it's like, that really doesn't excite me. It probably excites people that are in that sliver of the business, but, everything else was just kinda stupid. It was like, "Oh, the iBuyers can only buy up to 300 houses, and otherwise they have to divest slowly at any given time," and it's like, well, they'll just put together another fund and they'll buy
Yeah.
300 more in another name. Like,
Yeah,
it's just
exactly. Yeah,
it's
it's
just
dog and pony
stupid.
show.
Yeah,
Yeah.
it's a dog and pony show. So, I think that's kind of a nothing burger other than the FHA thing, but I don't know. We'll see. I'm hopeful. I mean, the real estate market always comes back. It's just a matter of when. I feel like we've been in a sustained stall position for, probably going on 3 years now, which if you think back, like, I don't know, you weren't in real estate at that point, but during like 2000, late 2007, 8, 9, I mean, really shit broke loose at the end of 7, beginning of 8. By the end of 8, it was like Armageddon. But it was really only like 2 years max of like complete disaster before people started returning to the market, both on a retail level, and then obviously investors were flocking to the market by, end of 2009. Um, we've been in like a flat compressing market for 3+ years. So it's almost been, I would say, a longer kind of depressed market now, not as extreme, but longer depressed market now than it was, post, the Great Recession. So it's eventually it's got to pop back, or at least, I don't know, the values are going to pop up, but the demand is going to have to bounce back at some point because it's just been kind of stalled out with low, number of transactions year over year over year over year now. And so it's like, people do need to move and they do need to buy houses and they do need to do all these things. And so I think there is a substantial amount of pent up demand that wants to break free. It's just a matter of when it does.
Oh, absolutely. I mean, there's I think plenty of demand and plenty of, pending supply too, where as soon as people go, okay, I can swap my 2, 3, 4% rate for 5.5, 5.75, it makes a lot more sense than, getting a loan where you're paying, like in San Diego, you buying $1.5 million house now, which is like pretty average home in most pockets of San Diego. Right now in current rates, you're going to be paying uh, even after the first year, you're going to be paying about $1,200 a month towards principal, and then about 5,000 and some change towards interest. And then you're going to be paying about $2,000 a month towards property taxes on that house. So like you're paying $100,000 a year right now in San Diego for $12,000 of actual principal pay down. um, which is most people that doesn't, if you have a 2, 3% note and you look at those numbers on that loan, it's dramatically different. You're paying 50, 60 grand a year total, and 12, 15 of that is going towards, principal pay down. And I just think that is the main driver of a lot of, real estate psychology right now is because, yeah, there's always that subset of people that have to sell, right? Auctions, inherited properties, or there's always reasons that you have to sell physical and asset-based distress. But, the other 98% of sellers, a lot of them, they would even engage off market. They're just not because, they're prisoners of their rate. I think that our government's trying to do something because they know, like you said, we've since 2023, we've kind of been in this weird stagnant period, which I think has been almost more rough than, an immediate massive, downswing that then bounces back fairly quickly. I mean, you remember during COVID, we had that 2, 3 month period, everything stalled and like everything shut down and the market pretty much froze. And then they started printing money and, like crazy. And it was like one of the best real estate markets ever from 2020 to 2023. And I think as we come out of that, I've been telling people, like, I don't know how we're going to come out of this exactly, but I know when we do, it'll be that period where you're like, "Oh, shit, I wish I was a part of that." And, it's when you buy the flip and everything changes and you end up making 250 instead of 70, right? Because the way things can go pretty quickly that direction. And, as I have conversations with guys that have been through multiple markets, they're like, "Yeah, I just keep buying, keep reloading, keep buying, keep reloading, because I know eventually I will catch that swing the other direction. That's when you make all the money."
Yeah, I mean that's pretty much the way it works. I mean on the front end of COVID, we were finishing a house and we went to sell it, and it was in the dog shit time of COVID to sell real estate, which was the beginning. Everybody forgets. Everybody remembers the back end where like asset prices went buck wild and crazy, real estate also being one of them. But on the front end, we had this house and we probably took $130 to $150,000 haircut in profitability. Had that house sold like 7 months later, we probably would have netted 150,000 more. So it was probably a $300,000 swing on that one house. But at that same point in time, I went and bought a lot that we paid 600 for the lot. We built the house. We ended up selling the house for 4.2 million or something like that, or 3.9. I don't remember. But our profitability on that was like $1.5 million. So it was like we went and bought something that we spec'd in the middle of this shitstorm, and then it, to your point, the values exploded and we caught the upswing, but we also sold something that we put a lot of energy and effort and time and capital into, and we took a haircut on the front end. So it was, to your point, if you just stay in the game, you're going to catch those upswings, right? And but you're also going to catch the the downswings, and those ones suck. Nobody likes doing all that work for significantly less profit than even your bottom line that you kind of put out there as realistic. But that's the game of real estate. That's how you hang around. That's how you
Yeah.
keep in the game, keep doing deals.
Yeah, I had a closing on Monday where it was a deal that I sold higher end deal where I had a couple offers on it, took one of them, and pretty much everyone told me, I sold it for 2.8, 2.8 and some change. And they're like, yeah, literally a year ago, we'd be paying 3.2 for this. And so that's just the way it works, right? It was a, sub $100,000 fee that would have been a $400,000 fee, a year ago. But there's also both, you catch that both directions. And I just think it's more important to just be in the game so you can catch both of those sides. A lot of people I think never really have, like everyone I've met in real estate that's been around for a long time, a lot of like their leaps in wealth all happened in like a shorter stretch. Like they've been in the game a long time, but then the market shifted and they found this one deal that they knew how to execute on that no one wanted to touch. They bought it, the market recovered, and right away they had $2-3 million of equity. They 1031 exchanged that up again and again, and now they're sitting on $10-12 million in equity across a couple buildings or whatever. But that's typically when I hear like quote unquote people that have been in it for a long time that have built real wealth in real estate. Now they've done some wholesale deals, done some flips, and made a couple bucks. But they're deca millionaires, or they have good liquidity and are living a life that people kind of envy when you think about a real estate investor. Is they've been in the game long enough where they always are kind of making money and doing deals, but they've had these substantial big growths and wealth through catching the market at the right time with the right deals. And I think that's why you have to kind of ride out the weird periods. And just kind of stay afloat and keep things pushing. And also, like a lot of people, like we talked about in a previous episode, like you've intentionally slowed things down and sat out on some deals or delayed some deals just because you're not in that rush of like, hey, I got to transact and make, I got to put through 3 wholesale deals this month or whatever, because you set yourself up that way. And I think that's great for our audience to hear of. I think the best precursor to good business decisions is personal liquidity. Because then you're not making decisions out of like, holy shit, if I don't do a deal, I don't transact, I don't do this big thing, I can't pay my bills next month.
Yeah, and I mean, to be fair, like that was the world I lived in for, most of my career. But it was also the fact that I had built a big enough machine that you got to feed the beast too, right?
Yes.
And so this time around, when we hit this kind of stall period, I mean, we were doing a lot. We were building 3 houses, finishing some rehabs and some rentals. I was ready to keep going. We had plans, ready to tear down a house that was right down the street from the 3 that we built. And I said, nope, we're not going to do it. I'm just going to rent it out. And then we slowed everything down, ran the rentals for a while. We're working on obviously our most expensive spec home now that we dried in the roof today actually. But yeah, to your point, I intentionally slowed things down because I know what these down periods are like. Like you can grind it out and you can keep doing all that work and just to keep people busy or pay a few bills or whatever. I've been through that period a couple of times. I've done it. And I
But
just said, you know what? Fuck it. Like I'll run these rentals, and when I feel like it's right again, like we're close to the bottom and it's time to jump back in, then I'll crank up volume and everything else again, and take advantage of it. But I'm not just gonna work myself silly all the way down to the bottom like I've done the last 2 times around. But I had to then, right? I was trying to squeak out a little extra income. I was trying to keep people busy. Now I'm in a little bit different position and also, just a little older and a little bit wiser. And
yeah,
so
yeah.
it was a conscious choice to kind of put myself in the position that I've been in for the last, couple of years, since this whole slowdown started. But I'm hopeful. I'm not somebody that, racehorse that just likes to sit in the gate and not go. Like I'm
Yeah.
definitely not that guy either. Never have been. But so I am hopeful that we get back to some stable footing by the end of the year, because then that'll let me continue forward and, continue pursuing what it is that I want to accomplish, when we came down here, which is, building ridiculously expensive single family homes. And we have to be able to continue to parlay that from 8 million to 15 million to 20 million and on up. Like, so the process has to keep going. I can't stall it out and, to be able to
Yeah.
get there. So,
Yeah,
so
it's a
but I think it will.
yeah. And you also so much of it, I think it was about not just saying yes to, like, the big deals, but saying no to, like, the things that would slow that down. Like, realistically, right now, you have the ability to keep deals if you wanna keep them or whatever, but for a lot of people, they buy a flip where, just because they're trying to take, home run swings all the time and, one of those goes south. I have someone close to me right now who's just listed a flip that thought they're gonna make a ton of money on, ended up they're gonna make barely any money on it, and then got red tagged right as they finally found a buyer, and now that's going to push it out 3 months, and they're probably going to lose money. And for a lot of people, there's another guy I know, a young kid in Seattle, flipper, who was so obsessed with this number of like, hey, I got to make $1 million in my 20s because like I have one buddy that does, and like that's what success is. And he was on he had his blinders on just to that, where he bought a couple deals and lost every dollar to his name and now had to completely pivot. And I think more often than not, people get themselves in trouble or are miserable in their business because they're trying to feed this machine, or they're trying to chase this goal of like, I have to make X amount of money in X amount of time frame that's completely made up, and, is not really how real estate works. Like, real estate's not a business necessarily where every year your income grows by 20%. Like, for me, in my experience in business as a whole, you have a couple years where your income will double or triple, then it kinda stalls, maybe it goes down a little bit, it goes back up, you make a bad decision, bad investment, it goes back down again, it goes up. Like, it's one of those graphs. It's like the stock market, right? It's like, yeah,
Yeah.
it's trending up over decades, but it's not like "Hey, I gotta increase my income by 30% every,
Yeah. I call
every."
that character building,
Yeah.
and on the other side of that, like, I mean, I'll be honest, I don't know that I've ever met anybody that made a lot of money in their 20s that didn't turn into just a complete asshole. And so it's good sometimes to
Get your
delay.
ass kicked.
Yeah, delay the gratification. I mean, even though nobody wants to, but, like, it actually makes you a much better human at the end of the day and more likable, and, you end up having more friends and contacts, and, you're just not gonna be that person that, 'cause money changes a lot of people,
Yeah.
especially when you're young. It really
Makes you
does,
weird,
and it
it
doesn't
makes
even
you
take.
weirdo.
Yeah, and it doesn't even take a lot for some people. If they got $500,000 in their bank account liquid, like, that is more than enough to make some people complete assholes, right?
Oh, yeah.
Money's a funny thing, and it's even funnier when you're younger. Yeah, people that chase it, I get why you chase it. Everybody's ambitious, and they see that one guy, and they're like, I want what they have. But at the end of the day, like, you got to be of a certain age before you achieve, those higher levels of success. Otherwise, you're going to end up divorced. You're going to end up with some illegits. You're going to end up with a lot of people that hate you. It's really not going to be that exciting of a life, or not as exciting as you think. It'll be exciting, but not in all the wrong ways. And so that's
It'll be
something that I have.
eventful, not exciting.
Yeah, eventful, not exciting. Yeah.
Yeah.
But those are, I've noticed that a lot more as I've gotten older. Um, so just food for thought.
Well, I know a lot of, like, the, kind of a sidebar, but I know a lot of the, and then we gotta wrap up. I know a lot of the, financial advisors with pro athletes and stuff, they build plans where they can't touch their, like, contract money until they're in their 30s or 40s. Just
The
because
Allen Iverson plan. Yeah, that.
when you're a 23-year-old kid, like, you get a $22 million signing bonus, you're gonna there's a very low probability, even if you are a great person, you're not gonna make some absolutely just ridiculous decisions. I think that goes to say, and I made good money in my 20s. I've also got my ass kicked up and down the street, and, um, that's been more impactful to me than dollars earned so far, as, is getting punched in the mouth and getting back up. But we gotta wrap. About at 25 minutes today, you guys. Thanks for coming out to, and listening to another episode of the Easy Button Real Estate Podcast. We have a lot coming your way. If you guys have not already reached out, we are doing an awesome event here in San Diego at the end of July, the weekend of the 30th. Our whole internal leadership team will be there, plus a bunch of you guys, pretty good operators. So reach out if you guys have interest in that. Beyond that, a like, a share, a review means the world. And we'd love to get to know more of you guys, where you're at in your business and how we can create shows that help you. So without further ado, we will wrap. And as always, you're only one deal away.